How do I make money in crypto? By being an absolute savage. And as a savage, I love nothing more than buying the fear that has been put into the market. Lots of people have been really concerned over where they think the crypto market is going, whether the bull market is over, and they have started to sell their bags. And people like me, providing the liquidity, have soaked up what we can and will continue to dollar cost average into some fantastic projects, fantastic altcoins for what happens next. Let's get into it. Now, I've said it before and I'll say it again. There is a huge opportunity in the coming months for Ethereum. Obviously, we've seen the Bitcoin spot ETF already, and it's been fantastic to see so many gains made for Bitcoin's run to the upside into new all-time highs. The next ETF that is looming in the US, of course, is the Ethereum spot ETF. And the Ethereum spot ETF is going to be showing us some huge opportunities for some very, very juicy gains. Now, Ethereum to one side, there are other altcoins that are associated with that Ethereum spot ETF that you may not know about. And it's these altcoins that I have been buying into alongside Ethereum, because that is where I think the next parabolic phase for the crypto run is likely to occur. Now, this is not just kind of clickbait. This is not to say, I'm just buying up a few altcoins that I haven't actually bought. These are actions that I have been taking in the crypto market, and I'm going to explain why I'm making them. Now, Ethereum rallied up 364% before starting to see this natural healthy pull to the downside. It's currently come down 31.19%, a fantastic dollar cost averaging opportunity for Ethereum should you want to kind of invest in it. Now, with Ethereum, I still see this one as potentially slipping down a little bit deeper. In fact, many of the altcoins that I'll be talking about in today's video still shows with potential price decreases increasing the chance for dollar cost averaging and building out those positions. And Ethereum is very much the same. We can see that Ethereum is still above its 200-day exponential moving average, basically indicating that things are still on a macro scale bullish, and we can't be too negative on the price action right now. We are looking at the 200 EMA as a support level for Ethereum, so we will be looking for a small bounce here, but I still see this one coming back down a little bit deeper and basically allowing us to dollar cost average and build out better positions for what happens next. Because when Ethereum does have its spot ETF approved, which I believe is an inevitability, we're going to see the really launching up higher. And I've been through this before, and I'll go through it again in today's video. We are talking about $11,000, $15,000, or $21,000 ETH. Now, those numbers might seem far-fetched. They might feel to you guys like they're unrealistic. But to me, in the technical analysis element, it does look like Ethereum has a long way to go and it has significant potential for some very, very juicy gains, specifically as we are now lower than the $3,000 level that we were just a few weeks ago. Of course, this is a huge dollar cost averaging opportunity if it is an opportunity for you. Not to say that it is, it's something that I've been buying, and I'd hate to be buying Ethereum for the sake of it. I do think Ethereum is likely to go up in value significantly when that Ethereum spot ETF is approved. Just take a look at what Bitcoin did and kind of get an idea as to kind of where Ethereum could be going. But like I said earlier, is more to this story than just ETH. There's actually a whole host of altcoins that are going to benefit from an Ethereum spot ETF. Let's jump into a few of those. Well, this one needs no introduction. We are, of course, talking Polygon's Matic. As a layer 2 solution for Ethereum, this is a bit of a no-brainer. Let me explain why. So Ethereum obviously has huge issues when it comes to gas fees. Essentially, it's a bidding system. The who pays the most will get their transactions confirmed fastest. And this is a huge problem in a bull run because people who want to get their transactions across the line faster will pay a hefty premium to do so. And as such, it creates a bit of a bidding war for the gas fee. And as a result of that, you find that a lot of the smaller retail investors are stuck with really, really high and unmanageable gas fee charges in order to actually move assets from their ledger device, for example, over to an exchange for liquidation. Sometimes it's just downright unaffordable and basically not viable to do. So enters layer 2 scaling solutions such as Polygon's 𝗕𝗃. Now, layer 2, like 𝗕𝗃, will allow you to move assets across the EVM chain without having to worry about those high gas fees. This is great for many dApps that are building because they utilize Polygon 𝗕𝗃's technology. It allows users to be able to freely use the dApps as intended. Just take a look at the DeFi sector as a clear example of a fantastic use case for the Polygon 𝗕𝗃 chain. Now, of course, there's many other use cases, NFTs and all sorts, but ultimately we can see that in a bull market, Polygon does phenomenally well. And I think we're going to see Polygon do very, very well again after the Bitcoin spot ETF. 𝗕𝗃 is currently down 54.38% in the last few days, and it has come down very aggressively. And it's a huge dollar cost averaging opportunity to build out your positions in 𝗕𝗃 if you haven't done so already. I still see this one potentially going down even lower than its current swing low, coming in at a price of 58.85. I do think we're likely to go back down more towards the higher to mid 40-cent ranges by the time Polygon is ready to launch to the upside. But again, there's no guarantees of any kind of dip or large crash in the market, and a dollar cost averaging strategy, in my opinion, has been one that has paid dividends time and time again. It's how I get rich in crypto, by slowly building those positions during the bearish markets and on those big heavy corrections in the market that we have seen recently. So with Polygon's 𝗕𝗃, we can see a nice healthy correction, a good amount of accumulation that can happen at these low levels, and basically as people are selling, believing that the bull market is over, you can buy up their assets at a pretty hefty discount. At the moment, at the point of recording this video, we are talking about over 50% reduction on its price of where it was just a few weeks ago. In terms of where I think it can be going in the long term, we have some really good targets. About $4.90 to $11.50 on the kind of conservative range, or potentially $6 to $17, with a potential moonshot way up here at $64 as well. So Polygon's 𝗕𝗃 shows me with some significant potential for growth in the longer term. This for me seems like an obvious one for dollar cost averaging and building out your positions, because as Ethereum has its spot ETF and as those gas fees do launch to the upside, we're going to see a huge demand for layer 2s on the ETH chain, and 𝗕𝗃 stands out from the crowd. And well, that brings me on to the next altcoin, 𝗕𝗏𝗀. 𝗕𝗏𝗀 again is a layer 2 solution for the ETH chain, and again I think this is going to be one that's going to perform very, very well in comparison to many other altcoins, meme coins and so forth that are out there. Now we take a look at Bitcoin. We've seen layer 2 solutions coming in for Bitcoin after its spot ETF, and I think we're going to see more layer 2s on the ETH chain start to perform very, very well. 𝗕𝗏𝗀 is the next standout one for me that I've been buying most recently in its dip to the downside. 𝗕𝗏𝗀, just like 𝗕𝗃, will stand out from the crowd for the obvious reason around tokenomics use case and the dev teams that are building on there. Lots of dApps are also building, and I think this is one that's going to perform incredibly well. Now, I do think there's going to be more corrections to the downside, so let's jump into the chart and take a look at what's going on there for 𝗕𝗏𝗀. So 𝗕𝗏𝗀 has crashed down 64.72% since January 2024. It has been a pretty brutal ride for anyone who was buying early on in January, February time when it came to ARB. Now, this in itself shows itself a huge opportunity for dollar cost averaging. I have been buying up 𝗕𝗏𝗀 on this move to the downside. I've done a few different buys at the slow dollar cost average, and I have to say I've built a very nice healthy position in ARB at this particular point in time. I do think we're going to see significant growth to the upside, and a 64.72% reduction in its price, or a very hefty discount, is very, very lucrative in the longer term. I still think this one has more room to the downside though, and I will be looking to continue to build out a dollar cost averaging strategy when it comes to 𝗕𝗏𝗀, because I do see some of these new layer 2s performing a lot better in the longer term than maybe some of the more established layer 2s like 𝗕𝗃. I think 𝗕𝗃 will perform very well because it has been around for quite some time, but also you don't see those exponential growth kind of spurts that you do see from new layer 2s, and I think that's really where 𝗕𝗏𝗀 Arbitrum sits for me. And I think when we take a look at the price action of ARB, we can see this one potentially reaching up into some of those higher areas. At the moment, our previous high coming in here at $2.42. I wouldn't be surprised if we start touching in on that $4 to $5 range when it comes to ARB. So anything lower than $1 for me seems like an obvious choice, with some potential exponential growth in the long term after the Ethereum spot ETF goes live. Next on the list is 𝗕𝗓𝗪𝗓. 𝗕𝗓𝗪𝗓 is again another layer 2 for the Ethereum chain. You can kind of see there's a bit of a theme here, and why I've been dollar cost averaging into all of these layer 2s for ETH. Not only do I think Ethereum is going to do incredibly well when its spot ETF is approved, which in my opinion is just an inevitability, we do think that layer 2s such as Matic, Arbitrum and 𝗕𝗓𝗪𝗓 are going to perform very, very well. Currently trading at the point of recording this video at $2.75. To me, this one seems like a bit of a steal, but I do think it has a lot further to the downside to go with some better purchasing opportunities. That said, a dollar cost averaging strategy, as I've mentioned many times in this video, has done me wonders, and I do think a dollar cost averaging strategy on OP is probably the right way to go. So I have been buying into this one quite a few times, and I do think this one is going to perform very well. But let's take a look at the chart and take a look at where I think things could be heading for OP. So 𝗕𝗓𝗪𝗓 is down 63% from its high, which was back in March 2024. Now we have of course come back up to resistance on that 200-day exponential moving average. I am expecting rejection, and I am expecting OP to move back down. We are looking at a death cross as well, with the yellow line crossing the white line. That's the 50 simple moving average crossing down lower than the 200-day exponential moving average. There's a lot of bearish things going on when it comes to OP, and that is the opportunity, because the opportunity isn't about buying the green candles on the way up. The opportunity comes from buying the dip, buying the fear that is put out on the market. There's so much blood in the streets, with so many people fearful that their positions are basically going to become nothing. And that is the fear that you want to be buying. It's the fear that I've been buying. It's why I've been a savage. It's why Chris has been a savage, literally just buying as much as we can on this move to the downside. It's very much expected, and we are starting to see a lot more bleeding out. And the altcoins have been bleeding out quite heavily recently, and it's a huge opportunity for dollar cost averaging and building out those positions. OP though, I do think still has significantly further to the downside to go, and I do think we're likely to see some better prices than the 274, 275 that we are at the point of recording today's video. Ultimately, long term though, I do see this one pushing is very, very nicely. I would be surprised if we cannot reach the $7 to $10 range in the longer term, specifically when we have an Ethereum spot ETF. Ethereum prices, gas fees soar. We'll see many of these layer 2s as alternatives, not only for dApps and projects building out, but also NFT projects all the way through to DeFi, but also the users and the chains in which they decide they're going to be holding their assets on. We can see Matic being a key winner. We know that Arbitrum is going to do well, OP is going to do well, and yeah, I think we're going to see many of these layer 2s perform insanely well over the next kind of 12 to 18 months, specifically as we start to launch up into that next bullish run, that next bullish market for the crypto space. The altcoins were kind of lagging behind in the first section of the bull market, and I do think we're about to see alt seasons or the altcoins really rally to the upside in the coming months. OP is a standard one that stands out to me. It's one that's a part of my portfolio that I will continue to dollar cost average, as I do think the price is going to be coming down 250, 240, somewhere in that range before we actually start to see a significant surge to the upside. You can let me know your thoughts on OP in the comments down below. And then there was 𝗕𝗏𝗪𝗓. 𝗕𝗏𝗪𝗓 is another scaling solution for Ethereum, and this one's tokenomics are phenomenal, which is why I think this one's going to perform very, very well when we start seeing those Ethereum spot ETFs launch and we start to see the price of Ethereum soaring, the gas fees soaring alongside it. I think Metis is going to stand out alongside Polygon's Matic, Arbitrum, OP, 𝗕𝗓𝗪𝗓. I think Metis is the next standout one for me, and so I have been dollar cost averaging into Metis. Okay, currently down at 58.25. It's phenomenal. Let's go ahead and take a look at the Metis chart. So Metis is down 66.74%, a fantastic opportunity to dollar cost average, but I do expect further downside. I think we are likely to see Metis essentially actually dip down lower than its current swing low at 49.76. I'll be surprised if we can kind of stay above the $40 level, in my opinion, but that is huge opportunity. So as I said, I've been dollar cost averaging into Metis. I know Chris has, as well as many of the other CC members have as well. I think Metis is one of those projects where when you see these opportunities, you have to seize them. I do expect further bloodshed here for Metis. We are, of course, getting rejection on that 200-day exponential moving average at the moment, but it is a fantastic area for dollar cost averaging. It's a fantastic place to be building out those positions, because I do think we're going to see a bit more blood here for Metis, and it's a huge opportunity to build that position ahead of what I think is likely to come. Okay, so expect some further downside, expect some volatility. In terms of the long term, we do already have an all-time high of $173 here on the chart, but I think we're likely to be pushing up very, very significantly. After this potential crash to the downside, I am expecting us to see a very, very healthy run upwards. I'll give you my thoughts right now. I think we're going to see another run very similar to what we've already seen, and that run is potentially going to take us up. And I'm going to be really conservative. I'll drop this down to the 30-cent area. $430 will be the area of focus for me. I think that's going to be a really good key area. So basically, say $440 for a nice round number, and potentially has the option here to continue running afterwards, where we might see a push more towards the $800 level. But I think to keep things nice and conservative, we should be thinking around $400 per Metis, and that is going to be some phenomenal X's on your investment should you be looking to dollar cost average into this layer 2 solution. So let me know what your thoughts are on these projects, the ones that I've been dollar cost averaging into, the ones that I've been buying during this bloodshed that we've seen in the market. Are these projects that you're already into? Are these ones that you're considering dollar cost averaging into? Or are these ones that you're simply avoiding? Let me know what you're doing and why in the comments down below. And if you haven't already done so, why don't you check out this video here of what I'm talking about when it comes to Cardano's ADA.